and welcome to another edition of the Moving Iron Podcast. This podcast is proudly provided by Axon, helping dealers move more iron for almost 100 years. Find out more at axontire.com. Axon was started almost 100 years ago out of a passion for keeping agriculture moving. It's that same passion that drives them today. With a vision for a better experience for both farmer and dealer, they set out to create a better way to move more iron. When you partner with Axon, you get immediate access to a full range of products and solutions designed to meet the complex needs of today's grower. Axon carries all major brands and sizes of tires, wheels, and tracks. From custom colors and sizes to fully customized wheels, you can have the solution for virtually any problem today's farmer is trying to solve. To find more or become an Axon dealer, please visit axontire.com.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com and Tractor Zoom delivering insights. If you're looking to see what's going on in the auction market and track all the different things that are happening out there, make sure you check out Tractor Zoom's Iron Comps. That's where you're going to find the latest information about what's going on in the auction market from about 500 different auction houses. So Chip is nice enough to come on to the Moving Iron Podcast once we can talk about what's going on. And actually, we're going to start doing it a couple times a week here just to kind of hit some different stuff and spend a little more time talking about what's going on there. So, Chip, man, how you been?
Been doing well, trying to stay cool. It is definitely the dog days of summer here in the Midwest. Pretty hot, pretty humid. Good for crop development, not so good for fat old men like me.
I know what you mean. So, Chip, there's a lot of stuff going on right now. This inflationary talk that we hear, I don't know, a day goes by where we don't hear something about inflation. We're starting to see some cattle prices that are really starting to, especially on the box beef side, that are really starting to take off. And oil is now starting to play into a big factor. It's starting to slide because of some COVID fears that are out there. So I guess as you take a look what's going on right now in the overall protein complex, what are some of the thoughts that you're having right now about kind of what you're seeing and what's this look like going into fall?
Yeah, it's a real mixed bag out there. You kind of touched on this inflation aspect, and there definitely is some of that. There's without question, any industry you talk to, there's some inflation happening. And probably on the beef side is, where the most optimistic piece of that equation is. We kind of had that seasonal break right on time. And man, this box beef has just screamed higher the last 3 weeks. It's up every day. And, packer margins are still there. I don't know if you saw here recently, Cargill announced, all-time record profitability. They don't disclose that necessarily because they're still a private company as far as where the profits come from. But a lot of that has to be on the packing side of the equation. Just unbelievable margins on the beef side. And, that's good from the standpoint of you need, that margin there, but it's been slow to be passed along and trickle down to the feedlot. And finally, the last couple of weeks starting to see a little better cash trade. And so I think that with this drought situation that's in the West, that's not getting any better. You've seen a lot of cow slaughter, historically high cow slaughter the last several months. That's continuing. Eventually, we're going to see the effects of that. It still might be 9 to 12 months out. Doesn't mean we're going to go straight up. But I think this cattle complex is in a pretty good situation to really stay pretty firm here for a period of time. And again, that doesn't mean there won't be periods where, you see $8, $10 breaks in cattle. I think you're going to see that down the road here. But, overall, I think you got some better things happening on the cattle side. On the pork side, the hog side, interesting situation set up. You've got strong cash prices, the lean index sitting there. north of where the August contract is. August is going off the board here in a couple days. It's sitting right at the 109 mark. And then you look out there for October, and it's $25, $26 discounted to the August lean hog futures. And that's an interesting dynamic too. It's almost the opposite of cattle. In the cattle, you look out at the deferreds, and they're well above where the nearby contract is, building in some optimism that the numbers are going to shrink and we've got better things out in front of us on the cattle side. The hog side is the exact opposite. And normally you see that, we kind of peaked right about where we normally do for a seasonal summer peak in hogs. And the deferreds are really building in some, discounts out there. Now, whether that can continue or not, I'm not sure, because you got some really, different dynamics in here. The cure for high prices is high prices. But you mentioned at the very beginning, this inflation thing, right? To expand in the hogs, we've seen that before where, number one, you increase, the sow numbers, you build the herd that way. Producers build more barns. Well, I'm not sure, if anyone's looked out there, and, it's probably about doubled, if not tripled, the cost to build these new barns than it was a year or two ago. So,
yeah,
I don't know if the incentive's there. So we got a really interesting dynamic started here. I don't know how it'll work out, Casey. You mentioned inflation too, and talk about the outside markets for a second. I feel like I'm rambling here. You ask one question and I'm like 10 minutes into this ramble, but so I don't know if you saw what happened the other night, 2 nights ago. I think it was the overnight Sunday. Gold kind of flash crashed, almost $100 an ounce.
Yep.
The dollar actually has been kind of flirting with a breakout to the upside, and it's kind of following through a little bit. And that's not inflationary. And part of this is expectations of interest rates. That's all currency fluctuations is expectations for interest rates within each country. The Federal Reserve has kind of hinted that they might start tapering sooner rather than later. Certainly sooner than, for example, Europe and some of these other countries. And if that's the case, that means interest rates probably tick a little bit higher. If we're ticking higher on interest rates relative to the other world, particularly Europe, then money's going to flow to the United States. That's supportive to the dollar. Overall, that's negative to commodities, but I don't know if that's going to be the normal case this year, with some of the issues we have out here on the grain side. We're the only source for a period of time here in the next several months to get corn and beans, to a lesser extent wheat, might be less responsive to the dollar than what we normally would be on some of this stuff. So, it just sets up a real interesting dynamic that I'm not sure we've ever seen this situation. To throw in a pandemic, and we certainly have never in our lifetime anyway seen this type of situation. And if there's anybody that can tell you how the last chapter is going to be played out here, that they're lying to you, because there's a lot of moving parts, and I don't know how that'll work out. But boy, there's some interesting dynamics, and something tells me it's not going to work out the way everyone expects, in the way the textbook would normally say.
Yeah, no, I agree. I mean, I think to your point about the Fed talking about interest rates and those kind of things, they're hinting, kind of like my wife hints about the Christmas present she wants. I want that one, and in this color and this size. So that's your hint for my Christmas present. It feels like that's what
gets that one too, doesn't she?
She does. She absolutely, it's shocking out of nowhere. You know what I mean? Yeah, and I think the Fed's going to do a lot of that too. But they have to be kind of careful about this, because right now we're still doing a lot of monetary easing when, getting people to, COVID relief and those kind of things. And they've extended out the what do they call that? The eviction stuff, as far as
moratorium.
Yes, rent moratorium, those kind of things. So, it's kind of hard to start jacking up interest rates when you're still paying people not to go to work and those kind of things. So it's going to be interesting to see how they walk that line, and a hard break either way is going to hurt, something somewhere. So it'll be interesting to see what happens. I mean, Sunday I went to the store for my wife and I got a pound and a half of hamburger and it was $9.22 or something like that. And I was like, wow, what happened to $5 hamburger day? But anyway, it was that, and I thought then that was high. So I mean, you take a look at what's going on, and there's plenty of stuff out there that point to the direction that obviously inflationary things are happening, but oil is playing into this too. If you look at what's going on in the oil market, it's been sliding just like gold has been. I think it was down again overnight, and going into this week and everything else, there's just been some pressures there. But that direct correlation with that, and then the African swine fever scares that we're starting to see in the Dominican Republic and kind of sweeping through the Caribbean. I guess as you look at those kind of things, what are the long-term effects there, you think? I mean, when do we start seeing that real pressure on the hog market when it comes to the African swine fever and how oil is going to play into that?
Yeah, I think that might be part of what's playing into the deferred contracts. Actually, that's getting close to home. Let's hope we never get it. A lot of vets would tell you privately that it's not if, it's when. I could argue pretty strongly that we're maybe one of the safest systems, if you want to call it that, in the world. Certainly, as you compare that to China, so maybe we could handle that and control that a little bit better if it ever did get here. But it would be catastrophic initially to prices. I think that there's a little bit of that concern and fear, maybe as part of this, deferred hogs. To your point, this inflation thing, it's kind of weird because you don't know what to compare it to, but it's like the Fed could, with the push of a button, and a slight raise in interest rates, control this to some extent. But it's like, you ever seen you go to the fair, the circus, and you got the clown, juggling plates on the sticks.
Yeah.
There's too many plates in the air, and so on the one hand, they could just slightly increase interest rates, slow inflation down. That likely would cause a large correction in the stock market. We're sitting here near all-time highs. Basically been on, the last almost whatever time frame you want to cut it, a year, 2 years, 5 years, very historic. I don't know if we've ever rallied this much, in the stock market as a percentage. It's straight up. And a lot of that is just because of this easy money environment by the Fed. So, again, I don't know how this thing shakes out. What it probably means to me when you put all this in the sausage grinder is just continued massive volatility. And that's difficult to go through as a producer, right? Because sometimes it has nothing to do with fundamentals of whatever, commodity you're producing. Hogs, cattle, corn, beans. It could be crude oil. Part of crude oil slide is because of this push by the United Nations to, get everybody going electric and to kind of reduce fossil fuels. Well, obviously, if that plan is implemented, that's less, fossil fuel demand, less oil demand. So that's why oil's been sliding. Whether they get that accomplished or not, I don't know. But that also affected corn negatively. Doesn't necessarily mean that we're going to use less ethanol, but corn got kind of thrown into the baby out with the bathwater type thing. So again, it's very frustrating, and in all these moving parts. To me, the bottom line, it says you're going to have unpredictable and very erratic large swings, both higher and lower, in all these commodities for the foreseeable future. I don't think it's a one-way street. And you better have a plan. I preach that a lot. That's really how we, at Blue Reef built our company, honestly, was let's help people with a plan. And it's more important now than it was when we started 11 years ago, to be honest with you, because the volatility is unpredictable. It's going to be there. You can't predict it, but you can, if you have a plan and be proactive about it, you can position yourself to to take advantage of it both ways. But it takes a plan, and I'm just afraid, that producers are still a little bit deer in the headlight here, expecting things to kind of get back to normal, or expecting we're just going to continue grinding higher. And I don't know if that's going to be the case. I think it could be grinding higher, but boy, you're going to have some big historic swings. We've already seen them in beans. Hogs almost got to new all-time highs, and then they sell off $20, and very erratic, head on a swivel or it'll take it off type of volatility we're seeing there.
Yeah, and it's not just day to day; it's intraday too. I mean, the swings you see in some of these from open to close sometimes is as dramatic as the day to day volatility that you see. So, a lot of moving parts out there, Chip, and you hit on it. The playing part of it's the most important part, man. So, if folks want to sit down with you guys over at Blue Reef, talk about what's going on there and kind of what you see happening, and then start really kind of wading through that planning process. What's the best way to get that started, and kind of what's the best way to get a hold of you guys over there at Blue Reef?
Yeah, best way, probably just give us a call at the office, and that number is 309-550-7213. We'd love to chat with you. We're not high pressure at all. And if we're out of the office at appointments, or that rolls over to all our cell phones. So we always answer, and we'd love to talk to you, just chat with you about what your current plan is, and what your future plan is here to navigate all this volatility, because it's going to be continue to be a wild ride in here.
Yes, it will be. Well, Chip, thanks for being on the podcast, man.
You bet. Always enjoy it, Casey.
Yeah, it's going to be a good one. Thursday will be as a report day. So Chip and I will sit down after the close here, and we'll get the numbers and show what that looks like. So it will be, I think these crop progress reports and all the fun stuff that come along with those are going to be heavily scrutinized by the traders out there through the end of the year. Don't you think, Chip?
Oh, it's going to be heavily debated. I've never quite seen a year like this on the grain side, whereas some areas are going through historic drought. Other areas out here, like where we're at, Illinois, you got areas that are possibly best ever crops, and everything in between. So that makes it that much harder to figure out what the final yield is going to be. And then and it's not just about us. The rest of the world is as important as I've ever seen it in the equation here. So yeah, this Thursday, the August crop report is going to be pretty heavily debated and watched and dissected once they come out with these numbers.
Yep, absolutely. So we'll look forward to that on Thursday. I am Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest editions of the Moving Iron Podcast. Also go to movingironllc.com. That's where you're going to find the entire library, plus any blogs I have written. Moving Iron Summit coming up in Nashville, Tennessee, September 15th to the 17th has officially sold out. So if you were planning on doing that, I still might have just a few more places available, but for the most part, it's pretty well sold out. So if you want to do that, either you can go and send me an email at MovingIronPodcast at MovingIronPodcast.com, and we can figure something out from there, or just go in and sign up, and I'll see. I'll get back to you with what's available. So with that, I am Casey Seymour, Chip Nellinger. Let's go do some iron, folks. Out. You want to have a meaningful competitive advantage to help sell more equipment. Whether you represent the sales, parts, or management department of an implement dealership, there's a surprising amount of complexity when it comes to tire, wheel, and track technology. Let Axon worry about that so you can get back to supporting your customers. Axon has leveraged years of experience to create a streamlined process that gives you a proven path to help today's grower and sell more equipment. The roots of their organization go back almost 100 years to the invention of the rubber tractor tire. Supporting agriculture is the number one driver of Axon, from product development through sales and service. To find more or become an Axon dealer, head over to axontire.com.
Moving iron in the 21st century.